Hello, fellow traders and investors. This is Minghan here. Today, we are going to talk about ETF investing and go through some allocation examples, including Mr. Ray Dalio's all-weather portfolio. A disclaimer here that the information to be presented can be found online or in books. This is not a buy or sell call, but something for you to consider when you are managing your portfolio. I had a recent sharing on ETFs, and I'd like to build on it with some examples. If you are unclear on what is an ETF, you can find out more in the description below. One strategy we can employ for investing in ETFs is the coresatellite strategy. The first example is Mr. High Risk Investor. So here you'll see that I have a core, and the smaller portion of the portfolio will be the satellite, hence the name coresatellite strategy. Mr. High Risk Investor placed 40% of his funds in S&P 500 ETF and 10% in a HEC ETF, which is a cybersecurity ETF, and 20% in bonds and 10% in cash, and leaves 20% for trading. So this is Mr. High Risk Investor. Next, Mr. Low Risk Investor placed 60% of his portfolio in a bond ETF or a stable corporate bond. 10% in retail bonds, 10% is the Singapore STI, 10% in REIT ETF, and 10% in cash. So this is how you can allocate your funds depending on your high and low risk. And this is the coresatellite strategy. Depending on your risk appetite, you can allocate your funds accordingly. This is the all-weather portfolio. From here, you can see the 5 different ETFs, which covers from stocks to bonds and to gold and other commodities with more weightage towards the energy resources. This is the allocation weightage, 30% in VTI, 40% in TLT, 15% in IEI, and 7.5% in GLD, and 7.5% in GSG. So how do they fare compared to, let's say, just investing in S&P 500? In the last 30 years, if you just invest in S&P 500, your compound annual return is about 9.93% with a 14.99% standard deviation. If you invest in the all-weather portfolio, you will obtain a 7.2% compound annual return with a 7.21% standard deviation. So this tells you that high rewards, higher risk, higher fluctuation, lower rewards, lower fluctuation. In one of my backtesting period from 2000 to 2021, the return is about 10% per year if you invest in SPY. Not a bad return, but if you invest regularly into the S&P 500, you must be ready for a 40% drawdown. If 40% drawdown is too scary for you, you can consider Mr. Ray Dalio's all-weather portfolio. So here is the summary of my research, and knowing your risk appetite will allow you to decide which ETFs to invest in, and I hope this gives you clarity and the courage to take action in managing your portfolio. Have a great week ahead.